Thank you for visiting the Coinceras channel again. Oh, my goodness. One of the most pervasive myths about cryptocurrency is that its demise is imminent. They're making an effort to accomplish it. Plus, the majority of people probably just think it's a conspiracy theory. They might not take it seriously. The problem is that this market seems to have been singled out. What we need to do is examine a couple of things. Okay, so trades, most of these conversations are trashed, most of them are meaningless, etc., so many people just ignore them. In the grand scheme of things, many of these conversations are essential. To a large extent, they are crucial for liquidity. However, I believe that a lack of access to excellent initiatives is a major problem with many of these exchanges in the United States. For instance, I've used Mexi as an exchange for a long time. I adored Mexico because of the boundless chances it offers. On April 3rd, KuCoin saw a huge 600 million withdrawal. Crypto investors are running away from KuCoin because of the criminal conspiracy allegations we've filed. The primary reason for this was the implementation of anti-money laundering rules and similar policies. A large number of these exchanges are currently under heavy scrutiny. It actually began before FTX and continued all the way back to, FTX. However, several of these sites are either facing legal action or are dealing with significant problems caused by regulations. This includes exchanges like Nance, Coinbase, Mexi, and many more. And I've only recently begun to be more forthright about Mexico. I see. So, this email started appearing in the inboxes of many people on April 1st. This is regarding the fact that your account will be practically deleted by June 30th if you do not comply with the Know Your Customer verification. A lot of people have been wondering, what's the big deal with KYC? I don't really see any major issue with KYC. It is my sincere desire to adhere to KYC regulations across all platforms. You could get away with using Mexi without undergoing KYC at some of these exchanges, like Mexi, which were actively pushing KYC or at least regulating the exchange in such a way that it was absolutely necessary to use their service. Oh, and it's totally doable in the US. You can't get Mexico in the US. Similarly, the vast majority of cryptocurrency exchanges are not. Among the early exchanges to implement Know Your Customer limitations, Nance stands out in my memory. Approximately in the years 2018 or 2019, maybe even closer than that. There was still the matter of migrating your assets from Nance to a compliant exchange. However, isn't this the issue? For example, when we take a closer look, we see that some exchangers are limiting user activity due to Know Your Customer policies. It is imperative that we employ decentralized exchanges so that our US consumers have a place to trade and participate in early investment possibilities. And that's when things get dicey, as not everyone is familiar with DEXs. You may recall that I touched on this briefly in September, but it's not limited to exchanges. In fact, it includes major banks as well. Customers' payments associated with cryptocurrency will be declined by Chase UK beginning October 16th. Customers received an email from the bank. As I mentioned before, it's fascinating that beginning on October 16th, Chase UK would no longer process client payments associated with cryptocurrency. This isn't brand new, and it's likely related to Operation Choke Point, as previously mentioned, to emphasize how important exchanges are for on and off ramps. The opportunities for US-based exchange are becoming more and more limited on a daily basis. On the other hand, banks are important. When you demonetize a currency, where does the money for it come from? What is the source of the additional liquidity? This poses an issue. However, this occurred 2 timbers ago. Uphold is an exchange that people can use. I personally know a number of people who were using it. Repeatedly, they were unable to access any financial services, including bank accounts and debit cards. However, this was only received on March 30th. Wells Fargo debanked me without explanation after 26 years of patronage and millions of dollars in fees. This happened to all of my accounts, including checking, savings, credit, personal lines, nonprofit company accounts, and everything else. Buying cryptocurrency with my personal accounts has been off the table since 2018. And I am a stickler for following procedures. The police accounts that were also closed last year for Crypto Association had my name all over them, so I think that's why. Regardless, we were informed that it was for some other silly reason. I get that private companies have the right to pick and choose who they serve, but it won't stop me from calling out their unethical and dirty dealings. Americans should be able to freely deal with anyone, regardless of whether there is a justification to spy on them. Stephen told me that Wells Fargo treated me like a criminal when I called to inquire. I really wish the bank goes out of business. Furthermore, I will not stop fighting for the decentralization of financial systems and the opening of bank accounts. The emails regarding the closure of his account are attached here. This issue has persisted over time. Actually, I will say this, if you are trading large sums of money during this bull run and have considerable amounts related to cryptocurrency, it is advisable to have various bank accounts. A number of bank accounts are required of you. Plus, you should spread your bets around if you want to avoid this kind of situation. Additionally, customer service is now investigating the matter via XDM. Pathetically laugh out loud. They have already had their reputation ruined. They look down on their consumers like thieves, yet they act concerned about me. This is super hilarious. However, Caitlin Long from Custodia Bank really replied to John's concern, saying, "I'm sorry to hear that Custodia has been seeing a marked increase in inquiries in the past 2 weeks from crypto companies desperately trying to replace bank accounts that their banks have closed. It appears that a new round of crypto or Operation Choke Point 2.0 is already underway, and the witch hunt has resumed in full force. This is where we have absolute certainty that they are trying to clamp down covertly. So, I will not remain silent." It has been confirmed by Caitlin as well. D-Bank, fintech, and cryptocurrency companies are undoubtedly the targets of a witch hunt. Here in the US, it's all about politics. Clutching at the point of operation in 2019 lawsuit settlements is unlawful and can breach FDIC regulations. I wholeheartedly believe that debanking should be a topic for the November election. As we shall see, even the SEC was turned into a weapon to combat crypto-based businesses. However, we also have this. I can also confirm that US banks are covertly acquiring cryptocurrency-related companies and services in preparation for the return of Choke Point 2.0. This is significant. Government organizations and banks alike should bring those responsible for discriminatory account closures to justice. Legislators ought to stand up for the people because these people are immune to the rule of law. Just to restate Caitlin's point, the practice of forcing customers to close their bank accounts is discriminatory, unlawful, morally reprehensible, and probably violates the 2019 FDIC operating choke point litigation settlement. Those involved in this practice will not escape punishment. Now we may talk about Operation Choke Point 2.0 as well. We are aware that the SEC is also participating in the game. For example, consider the penalty levied against JP Morgan, $200 and some million for market manipulation. Wow, there's evidence that they are influencing the admit to it. It's ridiculous. And this way as well. The fine is $125 million. All of them have occurred in the past few years involving JP Morgan, the biggest bank in the US. The SEC is subsequently requesting $2 billion in the Ripple lawsuit. Their goal here is crystal clear. Metal All Men did, in fact, publish an article in January. In fact, it's about the custodial bank, which, incidentally, lost the case against the Fed. The SEC isn't the only one cracking down on crypto custody. The Federal Reserve is spearheading Operation Choke Point 2.0 as well. One bank has sued the Fed for failing to approve a custodian's application for a Fed Master Crown. They lasted for this meal. If a bank wants to use the Federal Reserve System to clear wire transfers and ACH payments, they need a Fed Master account, which is just a bank account. Custodian is a Wyoming chartered depository institution, which satisfies the federal legislation that states the Federal Reserve must give master accounts to all federal or state chartered depository institutions. After 20 months of waiting, the Fed finally approved the custodian's master account, even though the approval process typically takes 5 to 7 days. With no other choice, the custodian had to resort to suing the Fed. It seemed like there were a lot of issues at play, because this went on for some time. Last but not least, the report that the Federal Reserve in Washington, D.C. revised to state the exact opposite of what the Kansas City Fed had concluded and which was used to reject custodian's master account application was plainly rigged, according to discovery documents, because the Fed was opposed to custodian's intention to offer banking and digital asset services to crypto-related individuals and businesses. In 2023, Operation Choke Point 2.0 truly began to take effect. This, however, has been a continuing process for quite some time. We can't keep asking, why was Ripple targeted, because the answer will change. Where is the $2 billion that the SEC is requesting? So, big banks are reportedly banning their consumers from using their bank accounts to purchase cryptocurrency. This is similar to how certain banks have barred users from buying and selling crypto, but gambling is still legal. People are putting their homes on the line in order to go to the casino and risk losing everything they own. But that's what we're supposed to do. Crypto, on the other hand, is a promising sector where individuals can invest and, in the long run, retire early, months or even years before the traditional retirement age. Well, that concludes our video. As always, I'd appreciate it if you could subscribe and leave a comment with your opinions. Goodbye for now.